Wednesday, June 4th, 2026. I banked $841 in the first 10 minutes of the session. 2 profit targets hit automatically while I watched. By noon, I was 100% cash. By Friday close, the market told me exactly why that was the right call. Let me walk you through exactly what happened, and more importantly, how the system knew to step back before the storm arrived. Marvell Technology and Cisco both had GTC orders sitting at their 50% profit targets. Wednesday morning, they filled automatically. No decisions, no screen watching. Marvell closed at $1.55 for a $545 profit. Cisco closed at $4.43 for $296. 2 positions, $841. First 10 minutes. But here's where it gets interesting. After banking those profits, the tape started sending signals that were hard to ignore. Marvell's weekly RSI hit 94, a level historically associated with exhaustion tops, not continuation. AMD was up 130% year-to-date. Dell had gained 45% in 3 days. Snowflake was up 33% overnight. The entire AI complex was going parabolic. When everything moves together like that, same direction, same speed, same narrative, it's usually not opportunity, it's exhaustion. The discipline was to recognize that the best thing to do after a strong week is nothing. No chasing Marvell at $284. No forcing new trades into euphoric tape. 100% cash by noon. I did enter one more position, a Dell bull put credit spread at $3.375 average. The thesis was sound. Record earnings, $43 billion AI server backlog, 10% cushion on the short strike. Then Friday happened. Hot inflation print, blowout jobs report, rate hike fears returned. The 10-year yield jumped 10 basis points. The parabolic AI names that had been leading the market all week reversed hard. I closed Dell early for a $131 loss. Right thesis, wrong macro timing. The account? Still up $710 on the week. $3,308 realized year-to-date. 76% win rate across 26 closed trades. Now here's the setup for this week. The VIX opened at 1586 Monday and closed Friday at 2081. That's a 31% move in a single week. After the close, the VIX spiked to 2151 in after-hours trading. Institutional players buying weekend protection in thin markets. My deployment trigger is 22. That's 1.19 points away. The framework is simple. Below 18, sell premium selectively. Between 18 and 22, patience is the trade. Above 22, credit spreads become the primary weapon. Elevated implied volatility means fat premiums. 4 positions armed and waiting. SPY, NVIDIA, Google, and Meta. All July expiry. If the VIX opens above 22 this week, the watch list deploys for the first time in months. After months of compressed volatility forcing us to the sidelines on premium selling, the environment may finally be shifting in our favor. Every trade I make, entries, exits, winners, and losers, gets documented in my free weekly newsletter. 26 closed trades, 76% win rate, plus $3,308 on a $50,000 account in 10 weeks. Nothing omitted. Link in the description. Subscribe free.